Hi there, my name is Brian Graham. I'm the manager of Treasury. At First Calgary Financial, we believe that financial literacy is an important part of empowering people to reach their financial goals. As your trusted financial advisors, we wanted to share more information with you about our Treasury operations through monthly economic update videos. This week, we're going to start off by talking about basis points and explain this commonly used financial unit of measurement. So I'm going to try and stretch your brains a little bit today, so here goes. A basis point, usually abbreviated as BP, is the smallest unit of measure used in finance to describe either a rate change in a financial instrument or the difference or spread between two interest rates, including the yield on bonds. It is also referred to as a beep, or in the plural as bips. One basis point is equal to 0.01%, which is 1/100th of a percent, or 0.0001 in decimal notation. By the way of example, if the Bank of Canada raises interest rates by 25 basis points, it means that rates have risen by 0.25%. So if rates were at 1% and the bank raised them by 0.25% or 25 basis points, the new interest rate would be 1.25%. So why does this seemingly tiny unit of measurement get so much attention? It's pretty simple. Basis points can add up to a lot of money for both individual investors and institutions. A single bond trade may be worth tens of millions of dollars, so tiny movements in prevailing interest rates can have a big dollar impact. While the basis point measure is primarily used in respect to yields and interest rates, it may also be used to refer to the percentage change in the value of an asset such as a stock. When the financial media reports that a particular stock index moved up 134 basis points in the day's trading, this merely indicates that there has been a 1.3% increase in the value of that index. The easiest way to convert basis points into a percentage form is by simply taking the amount of basis points and multiplying by 0.0001, which will give the percent in decimal form. So, if you have to convert 275 basis points into a percentage, simply multiply 275 by the 0.0001. This will give you 0.0275, which is 2.75%. This can also be done in reverse to find out the number of basis points that a percent represents by dividing the percent in decimal form by 0.0001. For example, if the yield on a bond has risen by 1.55%, simply take 0.0155, which is 1.55% divided by 100, and divide by 0.0001 to get 155 basis points. Like percentage points, basis points avoid the ambiguity between relative and absolute discussions about interest rates by dealing only with the absolute change in the numeric value of a rate. For example, if a report says that there has been a 1% increase from a 10% interest rate, this could refer to either an increase from 10% to 10.1%, the relative change of 1% of 10%, or from 10% to 11%, the absolute change of 1% plus 10%. If, however, the report says that there has been a 10 basis point increase from a 10% interest rate, then we all know that the interest rate of 10% has been increased by 0.10%, the absolute change, to a rate of 10.1%. I told you I'd stretch your brain. I hope you better understand this term that's so often thrown around, and I look forward to talking with you next month.